morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. Debt Watcher S&P Global Ratings has tagged the Philippines' banking system as one of the hotspots in Asia Pacific due to the prolonged impact of the health crisis. Now, S&P says that the Philippines, together with Malaysia, Indonesia, and Thailand, continue to struggle in containing COVID-19. It had earlier warned that the prolonged pandemic-induced downturn could weaken the credit profile rating of Philippine banks, with non-performing loan ratios rising to 6% this year. Meanwhile, on the broader front, ING Bank had lowered its GDP forecast for the Philippines from its initial projection of 5%. ING Bank's Nikki Mapa said the revision was mainly due to mobility curbs, a relatively slow vaccine rollout, and the economy is still in negative territory in the first quarter. First Metro Investment Corp also believes the economy will likely grow slower than expected this year. Now, just like ING, FMIC also lowered its GDP projection for 2021. It now expects the economy to hit a growth of 5 to 6% this year, slower than its initial forecast of 5.5 to 6.5%. UANP economist Vic Abola also pointed to the 4.2% contraction in the first quarter, as well as quarantine restrictions for the revision. However, he said the cut is fairly minor and is aligned with the government's projection of 6 to 7% GDP growth. Now, inflation will likely remain elevated in the coming months. That's as global oil prices continue to soar. This is according to Finance Undersecretary and Chief Economist Gil Beltran, who said crude oil prices are on an uptrend as the global reopening boosts oil demand. On Tuesday, the price of the international benchmark Brent crude inched up further by 0.5% to $75.57 a barrel. Now, in the first 6 months of the year, oil prices surged by more than 45%. The Finance Department is likewise expecting food and transport costs to push inflation higher in July, still on the back of higher prices in the international market. In fact, Beltran said food price inflation is expected to peak this month. That's as the country continues to rely on imports to meet its requirements for food and fuel. Kicking off the Thursday markets report with a look at those oil prices. Let's take a quick peek at crude oil. This is, of course, the WTI. It is slowing down, let's say, in terms of the uptrend. That's $72.30 per barrel. But you can see on my terminal here the 1-year chart and how that's just been a continuous surge in terms of prices. This, of course, after it had already tumbled yesterday amid building U.S. fuel inventories, and there's also a potential OPEC plus agreement to increase the supply. Now, in terms of other commodities, you've got gold that was around a 4-week high. That was aided by inflation concerns and Jerome Powell's comments on stimulus over in the U.S. Let's take a look at how this is all affecting our local unit. Quite some weakness when you take a look at our currency. 50 spot 334. We have not seen these levels in quite some time here. Quite weakening, but as you know, a lot of analysts have already mentioned, this had been expected as the economy would be reopening and importing even more oil. Now, something to be watching out for here are Chinese markets. This morning, key Chinese reports are due throughout the day. You've got GDP, whether there's an economic rebound that's going to be happening over there, plus some monetary policy implications, and we'll have more on those stories later on today. Let's take a look at how we are opening. A bit of a pullback here. A continuing slide since the past 3 days here. The biggest happened after that Fitch downgraded outlook to negative from stable, and it does not seem to be going back to those levels before then. We are still trading at 6,800 levels this morning, and this comes as, let's take a look at the leaders and laggards here. Bloomberry pulls the index down together with Ayala Corp and SM Investments. On the upside, you've got LTG leading the charge. That's up by 1.5%. Now, I just want to also quickly mention one other thing that may be affecting our movers today. You've got Thailand mulling blocking exports of AstraZeneca. That's as the cases emerge over there. They're weighing a temporary suspension of exports of the AstraZeneca vaccines. They were planning to produce 180 million doses this year through the partner CM Biosciences, and two-thirds of that were to be exported to other countries in Southeast Asia, including the Philippines. And this is the sole COVID-19 vaccine manufacturing partner which AstraZeneca has in Southeast Asia. So a lot of issues still on that vaccine supply there. And finally, just a quick check on PhilInvest. This, as they have said in a term sheet which was seen by Bloomberg News, that they are planning to price the Manila REIT IPO, so that's PhilREIT, between 6 pesos and 70 centavos to 7 pesos and 30 centavos. This is lower than the max price it had set at 8 pesos and 30 centavos. Now, at the top range, that would raise them around 11.9 billion pesos. Now, joining us today to chat about the interesting investment plays in these volatile times, we have with us Phillip Hagedorn. He's the CIO of ATRAM. Good morning, Phillip, and welcome back.
Hey, Danie. Good morning. Thanks for having me today.
Phillip, let's take a step back and just discuss offshore sentiment and also, let's say, domestic sentiment after we've seen a slew of economic figures here. Remittances continuing with that uptrend. You've got manufacturing data still on the expansion mode, but you still have exports disappointing. You've got the weakening peso and the oil story here, plus the Fitch downgraded outlook. How is this all, is there sort of net effect here? Which side is this veering towards, optimism or more pessimism?
Well, first of all, I think we have to be happy that we're at 6,800, not at 6,000, right? So, you asked first on the foreign sentiment. It's obviously still generally been negative, but last month, we saw inflows. I think at the end of the month, it still recorded a slight outflow. But, the Mondanisan IPO, for example, attracted quite a bit of interest in the Philippines. And I think it also opened the eyes to foreign investors to other blue chips that were still looking quite attractive and still are looking quite attractive today. I think the foreign investors will come. There is concern. We have an election coming up. They want to see what policy will be looking like, which is still going to take a while to understand because we have no idea, who's going to win. And obviously, we have a health crisis that we're still battling with. At least from our point of view, this third quarter is going to be critical for us in the battle against the health crisis, because this is when we do expect to see the inflow of vaccines and the ramping up of vaccinations across the country and opening up. We are opening up the economy. We can see the mobility numbers are much higher. Well, they're back to where they were, a little bit even higher than where they were in the first quarter with that recovery. So I think, there's reason to continue to be optimistic. The downgrades that we've heard about are not surprising. I think we started to hear downgrades as early as March. As a matter of fact, we downgraded in March because of that health spike happening and the anticipated lockdown. But our downgrade is right around where folks are talking about today, 5 to 6% GDP growth. The second quarter is going to be interesting because hopefully we'll be finally out of this negative GDP growth trend that we've seen with this second quarter. Those results should be out in the next few weeks. Lots of bits of news that are going to be coming out to be able to dictate a little bit of what the direction will be in the second half. And I'm still optimistic that we're going to see some fairly good numbers on GDP. We're looking at growth for sure. I've seen forecasts from 5 to as high as 8% for Q2. Obviously, that was coming from a minus 17 number, so we should see some growth, I hope. Earnings are on track after the first quarter. We will start to see earnings results come out very soon. I think the banks will be the first to report. Mm-hmm. And everybody's worried about those NPLs, right? I'm not too worried, actually. It seems like the banks have things under control. they're going to be higher, 4, maybe 5%. They were talking about 9% last year, and now they're talking about 6. So things are starting to be able to be clear, and maybe the support the BSP is given, the banks are at least the large ones. I can't speak for every single one. Will seem to manage this crisis quite well, manage through it quite well. So yeah, we're consolidating. Yes, there's a negative pitch study, but to me, again, you have to look at the peso. The peso started to move well before Fitch came out with this outlook. And I think it has something to do with, again, normalization. We should not have been at 47.
Okay.
We probably won't be above 51, but the 50 level, probably the fair level of where the peso would be, and maybe that will attract foreign investors because they didn't want to buy into this market only to get hammered by the currency on the first month. You know what I mean? So if we're at 50, maybe more reasonable for them. The market is 6,800 and it's at 50. It's better than buying at 6,800 at 47 and then losing whatever, 9% or 8% in the currency, right? So,
Philip, do you have any better visibility on the corporate earnings moving forward? What is your expectation for the second quarter? And with all of these things, can you actually say that the stimulus of the government, the reopening of the economy now has a concrete impact on the bottom line, and we will be seeing that, and that's going to improve the valuations moving forward?
well, we're hoping to see that. I mean, that's what we want to see, that there's continued improvement from the first quarter. It's tricky because you did have that lockdown in between, right? So that's why the downgrades. But even the downgrades, I haven't seen a downgrade that doesn't give you positive growth in Q2 this year. So hopefully we can turn that corner, and I'm confident we will. Now, with the earnings recovery, we also downgraded our earnings recovery. Initially, in the beginning of the year, we thought we'd see earnings grow closer to 40% for the PSEI as a whole on a weighted basis. We downgraded to 30%, and it hit that number in Q1. We expect to hit it in Q2. Hints, we don't have more hints than the general public will have.
Yeah.
If you watch the market and you look at who's doing buybacks and how aggressive some of these buybacks have been in the second quarter, coming from the companies themselves who actually know what's going on, that's a hint.
Your indication. How would that fit your year-end target? So this 30% growth, what it would be your year-end?
Well, fair value we think is around 7,500, right? That one, when you look at the index, if you put a PE multiple of 17, 18 times on it, 7,400 should be the target. But what's more interesting is that next year's EPS growth, in our view, is expected to be 30%.
Okay.
So not only is it 1 year that we're looking at, but we're looking at 2 years of consecutive strong earnings growth. And then that means that the index is only trading at around 14 times, I think, next year's earnings. And we're already in the second half of 2021, right? So 2-3 months, investors are already positioning for next year. And I think there's no reason not to be confident about continuous progression and continuous opening up, as long as we can manage the health crisis. That's still the number one challenge. Get vaccinated, get as many people vaccinated as possible, continue to open up the economy, and we should be okay.
Are you happy though with given all of these issues, with the activity that we've seen, nevertheless, with domestic investors when it comes to listings on the bourse, trading volumes? Even we've been in short-term
Yeah, I
trading.
mean, it's been a fantastic, this has been a game-changing experience these last 18 months or whatever it's been. The retail market has grown. The number of investors in the Philippines locally have certainly grown. I think the data is showing that close to 70% of daily turnover is local.
Right.
Right? This market would not be at 6,800 without the local investor. And the local investor is a force, is a strong force. People thought the Nissan IPO would not be well taken because it was too big, etc. It's performed very well considering the size. I think there's an IPO pipeline that's looking very interesting.
Mm-hmm.
And, maybe this could be the time for us to finally get this show on the road, as they say.
Okay, so as you mentioned here, despite all of these moving parts, and as you mentioned, containing the health crisis, you do see some buybacks happening. So there must be some much optimism that we don't know.
Take the hint from the owners of the companies
That still believe in the medium to long term prospects of their companies. So let's keep it at that, and hopefully like that sentiment will be spilling over into the markets. Thank you so much, Phillip Hagedorn, CIO of ATRAM.
Cheers. Thank you, Danie, for having me.
Here are the other headlines we're keeping our eyes on. After 18 long years, the country will soon have a standard regulation on the LPG industry. This comes after the bicameral conference committee has breezed through the proposed LPG Industry Regulation Act. The bill aims to ensure consumer welfare versus illegally refilled and poor quality cylinders by setting the best conduct and prices for all domestic LPG industry players. That's on top of institutionalizing cylinder exchange and swapping to allow consumers to purchase any LPG cylinder brand of their choice. The bill now only needs the signature of President Duterte for it to get enacted into law. For their part, Solan and Petron both welcomed the approval of the bill and said it would halt the unlawful trade of cylinders and curb other illegal practices in the sector. SSS has increased its benefit payout by more than 13% in 5 months to May as it extended cash aid to pandemic hit members and pensioners. The state fund said it released 90.5 billion pesos in Social Security and employees' compensation benefits from January to May this year. That's from less than 80 billion pesos issued in payouts during the same period in 2020. Social Security comprised more than 99% of the releases, while employee compensation made up less than 1% of the total disbursements. And that's the first look into the business day. Today is Thursday, July 15, 2021. Catch Businessworld Live for the market closes at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.